Good afternoon, everybody, and welcome to our training today on Payroll and HR Must Knows. I am Tony. I'll be your presenter today. We're going to give it a couple minutes past 1 to make sure everybody has a chance to log in. Welcome to Payroll HR Must Knows. My name is Tony Runcie, and I am the co-founder of BlueLion. We want everyone to know that this presentation will be recorded, so you will have access to it after. And of course, our disclaimer that this presentation is for general information only. We cannot give legal tax advice or any other kind of legal advice. Every situation is different and the circumstances do change, as most of the people on this call probably are aware, the HR and payroll people, the answer that we may give. So in the Q&A section, we'll do the best we can to give information needed that is requested. Who are we? BlueLion is an HR consulting company. This is our fantastic team right here. Our purpose is to provide HR support to businesses, and we specialize in blue collar companies and keeping them compliant. We are a 1% pledge company, which means 1% of our profits, our services, and our time is rededicated back to our community and the communities that we live in. We actually span several different states: Maine, New Hampshire, Massachusetts, and New Jersey. So we dedicate our time back to all the communities that our team members live in. And we specialize in working with you on what you need and never overselling. None of us are really salespeople, and most of us are probably not good at it anyway, so it's best that we're not salespeople. My name is Tony Runcie. I am certified in HR from both SHRM and HRCI. I am the co-founder and co-owner of BlueLion. I have a long history in HR for over 13 years now, working in many different industries, but I also have a very extensive background in payroll and HR. I've worked for almost 7 of those years in HR, assisting with payroll implementation, payroll processing, and payroll audits. So we are very familiar on this end with payroll and the magic that it brings to everybody's life and the stress that it brings when we have to process it either weekly, bi-weekly, semi-monthly, or if you're a magical organization that has people on 2 separate payroll cycles, 2 to 4 times a pay a month. For anyone who joined after I had said it in the beginning, if you do have any questions, please feel free to put it into the chat function or the Q&A. I will answer them as we go. And if you don't want to ask anything specific in the chat or the Q&A, as I send the emails out later today or early tomorrow for you to have access to this training, you will be able to email me back directly and I can answer any specific questions that you may have on a payroll or HR related question with this specific training. Processing payroll, one of those things that every organization has to do, whether you process it in-house, you have a person who does it maybe through QuickBooks or another timekeeping system and a payroll system where they track and manage everything in-house, they pay taxes in-house. Or if you use a platform, Paylocity, Complete Payroll Systems, ADP, Paychex, there's so many, Access Payroll. It's always an important thing to remember that you at the end of the day are the person in the nicest way holding the bag for the compliance. I deal with a lot of different businesses where we come in and we'll do an HR or payroll audit. We'll help them transition from one payroll system to another. And what happens during that timeline is we find out that some things might be outside of compliance and the customer gets really frustrated because they hoped their payroll company would keep them in compliance. And I try and tell them careful with thinking that's the process. Most payroll companies are great at what they do, which is processing payroll. They don't necessarily know the compliance for each state. They're good at paying taxes, but they don't necessarily know overtime requirements, salary versus non-salary, exempt versus non-exempt, pay breaks, time and a half, blue laws. So all those different things, they are not necessarily as well versed in. So paying attention to your specific state regulations, if you're in multiple states, all those regulations is really going to help. Because if any of us have ever experienced a payroll error, we are aware that it can be very significant to correct. And sometimes the time in order to go back and audit how far back a payroll error may exist is very time consuming, and that costs the company time, your time for the employee, frustration, and fingers crossed, no legal fees or Department of Labor audits. But payroll is definitely one of those things that you want to get right out of the gate, or you want to be paying attention to regularly. So if you catch an issue or an error, you can correct it very quickly. So how do we get payroll off to the right start? The first step is having a successful and problem-free payroll start is the point of hire. So when we're hiring a first employee, getting them into the system, is the information we're putting in there accurate? And it comes to a lot of different things of what are we putting in that's accurate? And we're going to talk today about whether the employee is to be exempt or not exempt under the Fair Labor Standards Act, what states you're working in, time and labor if you have to track time off, so on and so forth. So making sure that you're setting them up in the payroll system first and foremost is very important. You want to make sure their social security number is correct, their name is correct, and additional information. We recently just had a client, for example, who an employee had told them that they had got divorced. Here's my updated name. They had updated their name with their driver's license, but they did not get the information correctly over to the Social Security Administration. End of year came, W-2s got sent out. They ended up getting an error on the W-2 because the social did not match the name that was on account with the IRS. So one of the things I always tell people is make sure people who are filling out their W-4 understand that the Social Security number has to match your name, because otherwise it's going to give you a W-2 error at the end of the year. And no one wants to wait for those refunds. Maybe we want to wait if we owe money, but most people don't want to wait for refunds at the year end. So paying attention to the information we're putting into the system is super important. Additionally, most states do not allow you, some do, but most do not allow you, and New Hampshire is one of them, to mandate something such as direct deposit. So you can't mandate a direct deposit for your employees and say, too bad you can't have a manual check, you have to have direct deposit because it's a cost savings for the business, it's easier for the person processing payroll. You have to give the employee the opportunity, if they want a physical check, to have a physical check. The important thing to know when you have a physical check, of course, is it can cost the employee nothing to cash that check on your company's bank account. There can be no fees. So what that means is, we're in New Hampshire, maybe everyone on the call is New Hampshire. So let's say that I have a credit union and my company has Bank of America. Well, I want a physical check. I take it to Bank of America to cash it. I don't have an account at Bank of America. And they say, okay, it's going to cost you $2 to cash this check. That cannot exist for payroll checks. So you cannot have any kind of fee, and that's across, that's a federal labor standard, that's not state specific, that charges the employee for them to cash a check on your bank. Now, if their bank says that there's an issue and they have to, they're going to charge, that's one thing. But if they're drawing directly from the business's bank account, there can be no fees. So it's an important thing to check with your bank and let them know that it is that payroll checks should not have fees, or if there are fees, they do have to be absorbed by the business. I've seen so many audits pop this up, so many complaints, and it's a very costly thing to have, because there can be lots of fines and fees depending on who comes and brings the complaint to the Department of Labor. So making sure you're contacting your bank and saying, hey, if an employee comes in and they don't have an account with us and our bank, but it's a payroll check, is there a fee for them to cash it? The answer should always be no. If you classify someone incorrectly, you could also end up making incorrect withdrawals from their bank account, not their bank account, sorry, their paycheck. So making sure those W-4s, which have got a little bit more complicated, are completed correctly. I really encourage employees, when I hand the new 2022 W-4 out, to go to the website that's on there and see what that says they should have for deductions. Because for the last 30 something years that I remember doing, payroll and things and paying taxes, I've always remembered, oh, single zero, married one, married two. Well, that doesn't exist anymore. You don't just pick a classification, married, single, head of household, and a number of dependents. Now you have to say, do you have one or more jobs? Are you married and your spouse has a job? Okay, what's the dollar amount for your dependents? So it is a little more complicated. Of course, the IRS feels like it's less complicated, but that's the magic of government. So making sure they recognize what they're checking off. Of course, as an HR person, I tell you, you cannot tell employees what to put on that W-4. And it's so risky to do so because if you tell them to write something in there, check off a box, put a dollar amount, year end, when they get those taxes that are either owed or they're going to get a refund on, if it's not the amount they thought it would be, they're going to try and hold you accountable for giving bad advice. So when they ask you how to fill it out, tell them to go to the website that's on that particular form, and or to talk to their own accountant or a CPA, or if they use some kind of TurboTax or H&R Block or whatever may work, to communicate with somebody who's a tax professional who can help get that answer for them. All right. So classifying employees is usually the first thing we do when we hire somebody. Are we going to hire them exempt, which most people use language synonymously with salaried, or are we going to go non-exempt, which is generally hourly? Now, I cringe when those are the only two things we consider, because there are many companies that will hire somebody salaried and be non-exempt. But generally, most people either hire a salaried employee and think they're exempt, or an hourly employee and think they're non-exempt. Exempt employees under the Department of Labor are qualified as being exempt from paying overtime wages when the employee works more than 40 hours in a work week. So if they work 46, 47, they get paid the same rate of pay, where a non-exempt employee who works over 40 hours, they are qualified to receive at least 1.5 times their salary, their hourly rate. So making sure you're qualifying employees correctly is very important. A lot of people qualify their employee as exempt and pay them salary when they should not be considered salaried exempt. If you're ever wondering what you should qualify or classify your employee as, the IRS does have a really great checklist. The Department of Labor has a great checklist for you to know, yes, they qualify and the Department of Labor would agree, or no, they don't qualify. It's easy to keep everyone hourly, to be very honest. The Department of Labor never comes in and says, you overpaid somebody, shame on you. But it is something that if you're giving someone a salary and they are not, and they're exempt and they're working overtime and things like that, and you're not paying them, I have seen the Department of Labor come in and audit. They say this person never should have been an exempt employee. This is what their hours of overtime generally were. You have to back pay that 1.5 times their salary at those particular times. So it can be a very costly mistake if we are not coding people correctly based on exemption or non-exemption under the Fair Labor Standards Act. It is one of the most common mistakes businesses make, is misclassifying their employees between exempt and non-exempt. How I feel when I'm processing payroll, because it takes so long. The next thing to know and pay attention to is break times. Many of our employees take lunch breaks, whether it's 30 minutes or an hour. Depending on the state you're in, there is a requirement that you have to offer your employee a certain break or a meal period. For New Hampshire, it's called a meal period. So for New Hampshire, at 5 hours, they have to have at least a 30-minute meal period. It is called a meal period in New Hampshire. It is not called a break period. And the importance of it is to allow somebody to be able to eat something or drink something and create sustainability. So I get questions a lot of times where people say, well, if employees can eat at their desk or if employees can eat while at work, do they have to take a break? The answer is technically no. So we see this a lot in hospitality or restaurant industries. If you've ever been a server, or if you're a cook, how many times are you in the middle of a busy shift and you're like 30 minutes will slow down the next table I get, I have to wean tables off, whatever that might look like. So if you're able to be in the back and of course, sanitarily grab something to eat a couple bites here and there in between, serving tables, making sure you're washing your hands, then you're fine. However, if you asked for a break, you say, hey, I've been here, maybe you're a double, I've been here, 7 hours. I do want to take my 30-minute break, even though I was able to eat here and there. They do have to offer you that time. So you can't be denied a break. If you're in an office setting where employees can eat at their desks, and that's okay with you and the organization, there's no safety risk there, absolutely, they could waive their break. There is in the state of New Hampshire a meal waiver form where they can check off that they've waived the fact that they can take a lunch break. As an HR person, and I worked with an attorney who is, at one time I was like, oh, I'll just give it to everybody as an opportunity upon hire. The answer he said was no, because it could look like a coercion by providing it at the time of hire, that as an employer, your expectation is for them to waive a break. Additionally, when an employee signs a meal waiver form saying that they've decided to waive their meal of their own choice and volition, they at any point in time in the future can say they no longer want to waive their lunch, and there can be no retaliation against them. So paying attention to the meal times is really important. New Hampshire does not require any additional break periods. So there's no minimum, 10 minutes after you've worked 2 hours or 15 minutes after you've worked 3 or 4 hours, just that 30 minutes after 5. Be careful with your timekeeping system about auto deducting breaks. I see a lot of businesses do that because their assumption is everyone takes a break. That may not be true. And if you're auto deducting time from an employee's timesheet, that means you're deducting pay from an employee's paycheck. So being very careful about auto deducting breaks. If you do auto deduct breaks, you want to be careful about how long. Or is it 30 minutes? Is it a full hour? Are you sure the employees are taking that time? If they are not, is there a communication strategy where they can tell their manager, I didn't take that break, and it gets added back in so that you're making sure you're paying for true and accurate time worked? The next is breaks that are less than 20 minutes. A lot of employers don't realize that if an employee takes a 15-minute break, even if you require them, which I do think you should still, to punch in and punch out for that short break, you have to pay them for those 15 minutes. It cannot be unpaid. So that's one thing I see a lot of mistakes on with time and labor is a 15-minute break. The system will assume that it's an unpaid break, but it has to be paid all the way up till actually 19 minutes. Once they hit that 20-minute clock's time, anything less than that, the full 20 minutes can be deducted as a full unpaid break. But if I take a 19-minute break and I punch in at 19 minutes and 56 seconds, the whole break will be paid. So making sure that if you do have a timekeeping system set up, that you are not deducting that from an employee's pay stub, because they have to be paid that break. And that's a federal law. That's not state specific. The Federal Department of Labor views those as short breaks, and they should be covered by the employer. You are, again, not required to provide these breaks, but if you do, they do need to be paid. So I've seen the same thing for like smoke breaks. If you allow smoke breaks, paying attention to the timeline on that as well. The next major thing that we see come up as a mistake or an error a lot of times is weighted overtime. And weighted overtime is probably one of the worst things HR people have to do, quite honestly. Weighted overtime is the average of several rates that an employee may earn in a set period of time, and can also include bonuses if they are not discretionary bonuses. So what does that mean? We, for example, have a restaurant that we work with. They have some employees that switch between front of house and back of house. So some will be servers and some will be kitchen staff. When they're working kitchen staff, they have a higher rate of pay than they do when they're working as their tip serving rate. What happens is at the end of the work week, if employees have worked over 40 hours, you have to do a mathematical algorithm equation that breaks down what was their rate, how much did they make in the entire week, broken down by how many hours. That's their average hourly rate. Multiply that rate by 1.5 times to get what their overtime rate should be. So it does get very complicated. And some people just think to themselves, and I've seen it, and it's a huge risk, well, the last 2 hours that they worked of overtime were on kitchen staff, so I'll just do that time and a half. You can't do that. You have to wait the entire pay period in order to classify it correctly. You also have to pay attention for hourly staff who get just non-discretionary, so based on performance generally, or something tied to a performance or metric, bonuses in a pay period. If they've worked overtime, the bonus counts towards the weighted overtime, meaning you might have to classify back and say, okay, I paid you this amount of the last week, and then this week your bonus is based on last week. Well, you had 2 hours of overtime last week. You have to count the bonus and how you calculate it. So we do have a really helpful spreadsheet. If you're ever interested, you could also Google, of course, weighted overtime and figure out how to calculate it. But it can get very, very confusing, but you want to make sure you're doing it right for your employees. I have a question that says, if we pay a quarterly bonus, would that count towards weighted overtime since we pay it every quarter? This doesn't necessarily sound like it was probably performance-based to the specific employee. If it is, I would say it depends on if they're exempt or if they're non-exempt, of course, because only non-exempt people have to have overtime. So if this person wants to connect with me after, I can ask a little bit more questions, because if it's just a flat bonus based on how the business is doing and not a specific employee's performance, then it would not necessarily be counted. But if it is based on how the employee performed and they get that amount only if they're meeting certain metrics, then it would count. If they're getting it just every quarter just because, then you'd be fine. You wouldn't have to do it. I could probably do a whole training on weighted overtime. It's very convoluted. The next is minimum wage laws. So a lot of people, I'm sure, know minimum wage has been shifting in a lot of different states. New Hampshire, I still do not see anything that has passed as of this morning. That has passed everywhere, the House and the Senate, and all the way up through the chains, to make sure that our minimum wage has changed. So we do still have the federal minimum wage, which also hasn't currently changed, but I think they're trying to work on that. So paying attention to the state minimum wage laws that you have, and then minimum wage between an employee and a tipped employee is different. So you really want to understand what that looks like. The other importance to paying attention to minimum wage is when we're taking deductions from payroll, you can never take more deductions, whether it's medical, dental, vision, a garnishment, child support payment. You can never take deductions higher than what minimum wage times how many hours they worked would be. So you have to pay attention to that. And that's something that your payroll system generally should do, but doesn't always if it's not set up correctly. So if you had an employee who owed back a loan, let's say, and 1 week they only worked 2 days versus 5, and they only had so much amount of money, let's say they only earned $300 that week, and the loan back is, $150. You'd have to make sure that that other amount that they took home met the minimum wage threshold for hours worked. And if it does, then you could take the loan. If it doesn't, you'd only be able to take a portion of what was owed back. Again, some states require paid rest breaks outside of that 30-minute or 1 hour timeline, depending on what states you're in. So paying attention to that. And then just making sure you're checking with the Department of Labor based off of their accelerated, updated minimum wage. So like Massachusetts, I know they have an updated wage that's going to happen in January, and it looks like they have a scaled one for every January to move themselves up to the $15 an hour minimum. So I think this year it puts them at maybe 12. Next year, I think maybe 13 or 12 something. So paying attention so that if you have people that are below that, you're paying attention when you're doing comp changes to bring them to that minimum threshold every single year. Timesheet edits. So I hear this is a pain every day, and I agree. The state of New Hampshire requires, and this is New Hampshire specific, but New Hampshire requires that changes to employees' hours worked, and this is hourly employees, hourly non-exempt employees only. Salary people do not get really affected by this because their salary is a flat rate that is not affected by hours worked, and we will talk about that. But hourly employees, you need to keep a true and accurate account of work. And so if there are changes made by the employer to the employee's time card, the employee must sign off and acknowledge in writing that they've approved it. So they clarify here that if an employer uses an electronic system, which many of us do, to keep track of hours worked, there has to be a system in place for the employee to acknowledge changes to his or her work and what they've done. So either it's a rejection, maybe you can reject a timesheet back to the employee with the edits and say, please resubmit. I've seen companies, depending, they'll print the timesheet out of the system and have an employee sign it and keep it separate. But just because you've made the edit and the edit is tracked in the system does not mean it's been assigned or approved by the employee. I've had questions, well, the employee cashed their paycheck. Is that acknowledgement that the timesheet was correct? No, it is not. So whatever way works for you, whether it's printing it out every week, making sure the employee is submitting it, rejecting it back to them for resubmittal, whatever the threshold of the audit that you're doing is and that you're able to prove. Because the Department of Labor, absolutely, I've seen it, several nonprofits comes in, they pull those timesheets, they look for signatures, or they look for a agreement that the time should be edited, and then they look at those pay stubs. So if the pay stub doesn't match what the employee submitted, it's less or greater, then they are going to ask why there was edits and the employee didn't approve them. So be very, very careful about making timesheet edits. I always push back to the employee to make them do it. Adding PTO to an employee's timesheet is not a timesheet edit. That has been confirmed. So if you're adding sick time or PTO to a timesheet because the employee is out, that is not something they need to sign off on. You just need to make sure that your policy states that if you're out and whatever it may be, I'm going to add the time to your timesheet. We're talking about Bob punched in at 8. Someone said he punched in at 9. You changed the timesheet to 9. A whole hour went missing. Bob's like, I was here at 8, and it goes on and on. So the actual time worked is what we want to be paying attention to on the timesheets. I have a question. Do I recommend saving those change acknowledgements in their employee file? Absolutely. Yes. Whatever. If it's an electronic file, save it that way. If it's a paper file, save it that way. Sometimes I've seen companies, which it's all about convenience for you and how organized you feel and your kind of organizational style. I've seen some companies that have inside the employee file their own timesheet folder so that all the timesheets just stay in there. So it doesn't clutter the rest of the employee file with all the other edits. Everything can stay in that one place, but you have to keep track of payroll, and we will talk about the recording requirements for at least 3 years. So it is one of the things that you absolutely would want to track and keep track of. This is how you feel when you're following up with timesheets. Timesheets, I think, are probably one of the most common complaints I get from employers is I have to hunt somebody down. So-and-so didn't fill it out. They forgot to punch 17 times this week and they only worked for 2 days. So timesheets are always, no matter what kind of business you're in, whether you're a professional, you're a high level executive organization, you've got employees that are, working at Dunkin' Donuts. Timesheets are always a problem no matter who you are. So don't feel like you're in it alone. Payroll taxes. Okay, so employment takes are broken up into 2 categories: what the employer takes and what the employee has withheld. I see so many employees that get confused about these taxes, and these are taxes outside of like the standard federal income tax. So many employees will look at a pay stub or not, which is oftentimes the case, and they won't understand what the Social Security tax is, what the Medicare tax is. They won't understand the tax that you're contributing for unemployment. They also won't understand the tax of federal income tax, and they get very, very confused. I had an employee once look at their pay stub and they saw the Medicare tax changing every week because they got paid different every week. And they thought that I was adjusting their medical deduction for the employee sponsored benefits. And I was very confused by their question at first. And the thing that's even more shocking is their manager agreed that she thought when she looked at the pay stub that I was adjusting the medical deduction. And so I had to explain to both the manager and the employee what Medicare was and that they've probably been paying it because they're adults for a very long time. So some people just don't really understand taxes, and that's okay. But definitely trying to help them understand that is helpful because everyone has to pay it at a flat fee. So as an employer, you are obviously responsible for withholding and paying the taxes on behalf of the organization and the employee. If you're doing that in-house, it can be a little bit more complicated on who to file it with, but normally it's done quarterly for most things. And then you must report your taxes with the correct agency at year end for those W-2s over to the IRS. If you fail, some of us maybe have not realized there have been times that things have not been paid. You'll get notices. They are not afraid to notice you, or that there's been a situation they haven't received their money, or there's been an underpayment. They're a little slower to tell you if you've overpaid, but oftentimes they are going to tell you that. If it was negligent in the sense that you intentionally are trying to not pay payroll taxes, then there are some very severe penalties, both civil and criminal, that could come after you. I've seen it happen a couple times when employers are paying employees under the table. So they're basically getting paid cash, and they're not getting paid wages through any kind of real payroll system. The Department of Labor does find out. You're always going to be found out, whether it's sooner or later. I'm just telling you, it happens all the time. And what happens is they're going to audit some version. Maybe you're a company that keeps good books, or you keep 2 sets of books, whatever it is. I've seen it. They are going to get the information. They're going to see what you back on wages, and they're going to make you pay. And they're going to make you pay for you, and they're going to make you pay for the employee. They are not generally going to go back to the employee and ask for their 6 point whatever % of Social Security and their 1 point whatever % of Medicare. They're going to say, you were being shifty. You have to pay this amount because you weren't doing what you were supposed to do. So payroll taxes are very, very serious, making sure you pay them on time and you're paying them accurately for whatever you're withholding. I got another quick question that says, we use a payroll TPA that charges us $150 if an account is in an applied for status for after 90 days. Yep, we have applied and shown that we applied for these accounts, but the TPA still charges us $150. Is that legal? The unfortunate answer I want to tell you is technically it is legal, depending on their service agreement with you. I think that seems a little shifty on my end, because if you've applied, I know that sometimes it's taken months and months. I mean, we've applied for some states like Colorado. My God, I think it took 7-8 months. New Jersey, for our internal employee, I think it took 6 months to be able to get these ID numbers. And then it's like we're getting forms in the mail that we back owe money, and then we have to show that we've applied. It's such a problem and process. The government wheels turn slow. So the fact that your TPA is kind of taking what I mean, I don't know the TPA, but they sound like they're maybe taking a little bit of advantage. 150 is a lot of money after the fact. So normally businesses I know will just keep you in applied status. And then what happens is if they can't get the taxes over correctly paid, then there may be, a fine for you then, because it's not their responsibility if the ID number doesn't come in. But charging you just because the state is backed up seems a little bit, I guess I'll go with the word dicey. Seems dicey, but legal, yes, unfortunately. But yes, COVID has created, I mean, if you even try and call at this point any kind of person at the state, unemployment or otherwise, good luck with that. You're probably never going to hear from anybody ever again. Next thing we see often is retirement eligible wages. So I see this question pretty regularly, and I see this miscalculated even more often than I should. So a lot of businesses or companies who set up retirement plans, depending on the kind of retirement plan it is, don't code or don't ask their payroll company to code the compensation correctly in the system for what is qualified as an eligible wage. So they'll say, okay, yeah, salary is eligible, hourly, overtime is eligible, the bonus is eligible, but commission, for some reason, we're going to say commission is not eligible. Commission is eligible. So by not putting commission in and not withholding whatever the employee and you have agreed upon, if there's a match, the payroll from, then what happens is at year end, if you don't have a solid TPA who's keeping track of things, you absolutely could pay penalties because you're back owed on contributions. So making sure you're looking at that plan document, if you do have a retirement plan set up, of what is defined as the eligible wages, and sending that to your payroll provider so they set up your deductions correctly. because there is very specific language on what is and what is not considered eligible. So it even defines here eligible compensation does not include things like severance pay, which is very standard across the board that it wouldn't be included. Relocation bonuses, a pay in lieu of vacation, sick leave. So normally if you're having a state specific sick leave, not sick PTO, gain from stock options. So paying attention to this is huge. It's another really big compliance risk. Paying attention to what is considered eligible wages. And if there's any additional thing defined under your qualified plan as an eligible wage, making sure your 401k is set up correctly and so that your payroll is set up correctly, because year end could come. And if you haven't paid those contributions, there are big fines and fees that can come with that specific background. Check with your 401k provider on that to make sure you have the right things listed, and then double check with your payroll provider that they've matched exactly what your 401k provider states. Next up, we have final wages. I get a lot of questions about final wages. It is state specific. This is New Hampshire. So I did do that New Hampshire RSA. New Hampshire law usually has RSA in front of it with these particular kinds of things. If an employee quits or resigns, and I get this all the time, if an employee quits or resigns, the wages are due by the next regular pay date, which is great. Except if the employee gives one pay notice to quit, the employer should pay all wages due within 72 hours. So what does that mean? Your weekly payroll, the employee is given 2 weeks pay, 2 weeks notice. Well, at their 2 week notice, when that last day comes, they should be paid all the way up through their end of day. And any additional like work, like just making sure if you think they're done by 5, paying them through 5 o'clock, or if you're like, I don't want to deal with that 5 o'clock, I'll pay them through 6 o'clock. So a lot of employers are like, oh, they've resigned, I'll just pay them at the next regular payday. If they've given, as it says, one pay notice, and that's very specific. So if you're bi-weekly and they only give 1 week, you don't have to do it. But if you're weekly, they've given 2 weeks, they've given 2 pay notices. If they're bi-weekly and they've given a month, they've given, at least 1, if not 2 pay notices. You do need to provide them with all wages due within 72 hours. And then of course, if you fired an employee, the wages are due within 72 hours from the time of termination. So that can either be a direct deposit, if it's a check, making sure that it's mailed in the mail. I get questions sometimes about mailing checks. So if an employee always receives physical checks mailed or picked up, then they can be mailed. Don't ever give a check to somebody who is not the employee unless it's in writing from the employee that it can be picked up, signed for, and you have that documentation very clearly. So paying attention to that is really important. But this is the final wage law for the state of New Hampshire. Massachusetts is much stricter. I think Mass has same day or 24-hour requirements, if I'm not mistaken. Exempt employee pay policy. So we have exempt employees, which means they get a flat salary generally. Doesn't matter if they work, 38 hours or 47 hours. How and when are we allowed to adjust their compensation? Another very common question that we get. So exempt employees, per regulation under the Fair Labor Standards Act, must receive their full salary for any week in which they perform any work. And it doesn't matter, again, if they work 1 day or 5 days, or if they work really efficiently or not efficiently at all. So it's without regard to the number of days or hours worked. However, exempt employees do not need to be paid for any work week they do not perform work in. So if you have a bi-weekly employee and they work this week, but they don't work next week because they're out sick, you don't have to pay them next week just because you're bi-weekly. You don't have to pay the full salary for the 2 weeks. You can retro just 1 week of salary. If you have a PTO policy and they use sick time, of course, you can supplement the sick time if that's your policy. But if you're let's pretend you don't have any time off, you only have to pay the 1 week worked. Deductions from pay cannot be made as a result of absence due to the circumstances listed below. So that means if they're out for any of these reasons in the work week, 1 or 2, 3, 4 days, but they work 1 day, you can't deduct salary from them. You have to pay them still their full wage. So if they're jury duty, attendance as a witness, temporary military leave. So temporary military leave is if they're only really gone for like a day or 2. Again, if they don't work, we have, for example, some military leave, they'll be gone for like 2 weeks in the summer in order to do additional training. you don't have to pay them for those 2 weeks because they don't perform work within those 2 weeks. But if for some reason it's a long weekend, we have some military reservists who will go away for a long weekend. They may have to travel. Maybe they'll miss a Friday or a Monday. You can't deduct the salary from that particular week. Absence is caused by the employer. So if the office has to be closed down for some reason, and maybe in today's society, they can't work from home, you can't deduct the pay from them then. Absence is caused by the operating requirements of the business. So again, if the company is under some kind of an audit or they need to close because there's issues with the building, we've seen issues with, there's been a lot of issues. We had one organization, it was an auto dealer. All of a sudden their air system inside their building went down, and because they're all glass window sided, the temperature in there rose to above what OSHA standard guidelines would allow for employees to continue to work in for this particular setting. I think some of us are thinking, what about construction workers that are outside on 100-degree days with long pants and boots and hats and vests? They operate under a different guideline for that particular job. And so they were sent home and they were paid for that day. Partial day amounts other than specifically discussed below, which is in our next section. So if they went home sick, you can't deduct. And if you don't offer PTO or sick time or any kind of leave, it is what it is. They still get paid their full amount of rate. Absences of 1 or more full days for personal reasons you can deduct for other than sickness or disability. Full days. So if I'm an employee and I say, okay, let's say you don't have vacation time, pretend you're the kind of business that doesn't have it, which is rare, but I want you to really think about it for a second, because let's say somebody ran out of vacation time. So absences of 1 or more full days for personal reasons, and it has nothing to do with sick or disability. So I've decided I'm going to go to Aruba. I'm taking Thursday and Friday off because it's cheaper for me to fly on a Thursday. I'm a salaried employee. You don't offer me vacation time, you absolutely could make the adjustment for those 2 specific days. You do not have to pay me my full salary because it's personal reasons, it's vacation related, it's not a sick or a disability, and it's a full day that I'm gone. It's not a partial day. If I came in for a half day on Thursday to work and then I left to get the airport at the end of Thursday, then yes, I'd have to get paid for the full day Thursday, but not necessarily Friday. Companies' vacation or paid time off policy should be clear. So if you do have PTO, on when such a deduction could occur. So when I'm going to take PTO from you if you're not here to supplement and fulfill your full salary, such as when an employee is exhausted all vacation or paid time off. So again, it can say for salaried employees, once all vacation or sick time or whatever you're calling it, PTO has been exhausted, if time is taken for personal reasons outside of sick or disability, full day increments will be deducted from your salary. So making sure that you just outline that very clear. It's within the guidelines of the Fair Labor Standards Act and the Department of Labor. You can make deductions on full days like that. And if fees are received by the employee for jury or witness duty or military leave. So if you are the organization and you ask to see any kind of payments made for jury duty, and let's say they're a salary that they make $1,000 a week, and for jury duty they made $100. You could reduce the rate by 100. You could give them a $900 salary that week versus 1,000 because they got it, but only if they didn't work at all during that week. These fees may be applied to offset the pay with otherwise due to the employee for that week. So exactly, no deductions can be made for failure to work for these reasons. Next section you're allowed to deduct for is deductions for the first and last day of employment. So if you have a salary employee who starts work on a Wednesday, you don't have to pay them for the full salary of a Monday through Friday. You can pay them Wednesday through Fridays prorated by full day increments. Always full day increments. Just think about that. Full day increments, full day increments, full day increments, whatever those full days are, full day increments. When only part of the week is worked by the employee, as long as this practice is consistent across the board. So you always want to be consistent with your practice for payroll and really anything. So documenting how you manage these things in-house helps keep you on track, helps keep an employee and everything really transparent. And so if there's any questions moving forward about why you've done something some way, you'd have documentation that shows that information exists. Deductions for unpaid leave taken in accordance with legitimate absence under FMLA. So I have seen people do intermittent FMLA. And what they'll sometimes do is they'll transition a salary employee to hourly during that time, keeping true to whatever that hourly rate would be. And then that's sometimes a little bit more helpful to them. So you can track and don't have to pay. But if it is FMLA and they're gone, you don't have to pay them while they're out for FMLA, even if they left during a partial week. So that's really the only time you can make adjustments to salary exempt. And again, it's exempt employees' pay statements. How else do we catch errors? So always double checking the register, even a couple times. And if there's a second set of eyes that can be laid onto it, that's great. If your payroll company provides certain payroll reports, I know I work with one payroll company that I love because there's 5 or 6 reports before I even hit submit that I can see that red flag me to things. Like if I know my company is 100% direct deposit and all of a sudden I see a check, I know that maybe a direct deposit didn't pre-note, or maybe there was an issue and I can follow up on it immediately before I hit submit. It also tells me these are the employees that weren't paid this pay period. So I'm like, oh, great. That's helpful to know. This makes sense to me. Of course, this person's on leave. This person's on, whatever. Oh, wait, this person's salary. Why didn't it pull in? So it just helps flag me to any kind of issues. It also helps when you're looking to see that everything's coded correctly when it comes to PTO. All of a sudden, is there a new earning code, or do you see an employee who has 100 hours of overtime? That makes no sense. Was there something wrong on their timesheet? So making sure you're looking at that payroll register is really, really helpful. It also helps if you look from one to the next. You're like, oh, wow, my payroll went up, by $50,000 this pay period. I've seen people see that, but it's like, oh, it's because you did bonuses. Just noting that so you recognize, oh, that's why the payroll was really high, or we had a lot of hiring happening. So all of a sudden we had 5 new hires start in the last 2 weeks whose salary is now due. Paying attention to those things will be very, very helpful for you to catch things. I'm a big proponent of payroll notes. So every single time I process payroll for myself or for one of my clients, if it's me, I just keep track. I keep a file of every single pay period and just notes, so-and-so is a new hire, so-and-so came off, so-and-so added benefits, 401k match kicked in, so-and-so, changed their deductions, whatever it may be, just so I can go back as a historical versus me trying to wonder what I was doing. I do the same thing for clients. If there's weird stuff, I send them payroll notes so that they know, here's all the stuff that I want you to know, kind of pay attention to in this particular payroll. So it's helpful for you. We're doing 1,000 things every single minute. How is it possible that you're going to remember what you did 5 payrolls ago, whether it's bi-weekly or weekly, and why it went that way? So making sure you keep track of that. So it should be part of your regular payroll process. But it can also be run over long periods of time to help spot any kind of trends or tax issues, minimum wage inaccuracies, or overtime usage. So using those reports for budgeting is also really common. Paying attention to the register at the end of the day is one of the top things I tell people to look at. If your payroll system lets you run a pre-process, so you can take a look before the payroll submitted, that's always best case. It's always harder to call up your payroll company or try and back the payroll out and process again if there were any kind of issues or glitches. So big main takeaways for how to make the payroll successful is try your best to get it right from the start. If you're doing a transition from one payroll to the next system, always break things down into microscopic things. Okay, how is my PTO carried over correctly? Am I meeting any kind of state required leave laws? Okay, are all my taxes set up the way they should be? Am I holding all the rates correctly? Is my new hires set up the way they should be? Are they reporting them correctly? It's going to save you time to slow down a little bit in the beginning versus trying to catch an error in the end, as we've said. Stay on top of hours worked. Make sure that they're getting paid overtime if appropriate, whether it's standard or weighted. If you're in the state of Massachusetts and you're joining us today, Massachusetts does have blue labor laws that I believe go through the end of this particular year. And then I think they wean off slowly next year in 2023. Blue labor laws require certain holidays and Sundays to be paid at a premium rate of anywhere between 1.2 to 1.5 times the employee's rate. So making sure that the system is set up to track those hours, gather that data and pull it into the timesheet and over into the pay stub. Double check that payroll register to ensure appropriate deductions and employee codes are on it. Even if you highlight things, printing I know we're in a world of technology, and if you're great at tech and you use Adobe maybe or another system that you're able to print something and track everything kind of like it's paper, awesome. I still like to touch things sometimes, so I print them, I highlight, and I make notes. That's just me. That's my style. Whatever works for you is important, but making sure that it's something that truthfully is working for you. Especially because how many of us have maybe started in an organization taking over payroll and we wonder what the previous payroll person was doing, and there's nothing for us to look at. There's no notes, there's no registers. Like, we can pull things from the system, but we have no idea why so-and-so's deductions were changed because there's no form telling us that they've enrolled in something new. Well, little did we know that we started double deducting because they were going to go on a leave, or we realized during an audit that they owed money. So really keeping really good records is important, which is our next slide. So record keeping. The Fair Labor Standards Act requires that you maintain certain records for exempt and non-exempt employees. Okay. The Fair Labor Standard also mandates how long records have to be kept and when and where they need to be maintained. So the documents you're required to keep include, which are pretty standard, like an employee file, right? So employment contracts, but then there's time cards and records, and that show your deductions from and additional wages. So that's your pay, payroll register, pay stubs. Register is fine for an employee. If you pull pay stubs, that's great. If you're transitioning from one organization payroll to another, that's a glitch I see sometimes. People forget to download all the pay stubs for historical data back to a certain time, and then they'll charge you. Some payroll providers, if you have to go back for an audit because you don't have those statements, they'll charge you for it. They'll say, oh, for you to have access to our system again, because you're not a client, it's going to cost you X, Y, and Z for these reports, which is kind of crappy if you ask me, but be careful. And if you are transitioning from one platform to another, download all of your pay data before you leave so you have access to it on your file. So you also need to check your state to see what the record keeping requirements are. So for New Hampshire specifically, the employer must keep a true and accurate record of all hours worked. Those are your timesheets. And all wages paid to employees. Those are your pay stubs. These records must be kept for a minimum of at least 3 years. If you keep them longer, that's fine. Obviously, if they're active employees, you'll generally keep them through the history of the employment. 3 years is fine if you want to start destroying terminated employees, whatever it may be. But time and labor wise, remember there's other reporting record keeping requirements, depending on what else is in the thing you're going to destroy. 401k, for example, disability paperwork, that has to be maintained much longer. But pay statements and timekeeping system, time tracking, 3 years for the state of New Hampshire. Okay. So we're getting pretty close to 2 o'clock. I think I'm trying to keep everything on track as much as I could. I think I answered most of the questions inside the platform. I did know I saw one person who asked that one question about the TPA. I'm not sure what that payroll, I am familiar with the payroll that you shared, but I'm not sure what they charge. We work with several different platforms that I can connect you to if you're interested in looking into them that are not necessarily, that don't necessarily do that, which is kind of nice, but it depends on the cost, I know. So if you're interested, I can share that information very easily with you. If there's any other questions, I'll give it a minute in the chat or the Q&A. Okay, great. All right. Hopefully most of you are on our social media or you are on our newsletter list. If you want more information, we do trainings every single month, free trainings to you, as well as we do offer a harassment training quarterly for clients and people we work with. If you want to keep people in compliance with harassment training, if you need to contact us, please do so. But we are all over social. We share lots of fun things. We blog weekly on fun facts, payroll issues, anything you can think of. So if you're ever interested, it's a great place for free resources for you and your business or you or your HR team. Feel free to reach out to us if you have more questions or need any more information. I got a couple questions inside my box here. Let's see here. I have a CEO holding pay all because he wants to wait on financials from the previous year. He does one go about filing a complaint with the DOL and possibly not getting paid on time. Okay, shoot me a private email for that person. because we might want to get on a call and I might be able to answer some of your questions much faster with a few more details. So feel free, when you get my email, all my phone number, my email, my contacts, you could tell anything is going to be at the bottom of that page of my email. Just shoot it back to me. We'll get on a call real quick and I'll be able to answer those questions for you on risk, and then what the best way to kind of go about reducing that risk is if the person's interested in following whatever you suggest, which sometimes I know is not the case, but I can give you the best I can get. Okay. Well, thank you everybody for joining. I hope this was helpful. I hope I see many of you again at more trainings. Again, if you have any questions, you are going to get the video recording. It usually takes about an hour or two at the end of the training for it to launch over to me, and then I will shoot it to you in an email. I thank you all very much, and I hope you have a fantastic rest of your Thursday, and we are one day closer to Friday.